Welcome to the Money and Wealth Show, brought to you this week by AmericanManganeseInc.com. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, where every week we offer you opinions on business, the economy, and the markets. And this week, it's a real pleasure to welcome back to the program the head of Kaiser Research, John Kaiser from Vancouver via San Francisco. Nice to have you with us, John.
It's wonderful to be here. Thanks, Sterling.
It's good to see you again. You were recently in Calgary. You spoke at the Resources Investors Conference to our many friends in Alberta. What did you tell them?
Well, I told them that the United States is starting to turn the corner, and when that starts to gain traction, watch out. We are heading into a major upleg in the raw material sector, in particular for companies with a boom in mine development about to unfold in the next few years.
Now, that's a very different forecast from what a lot of people are saying about the United States. In fact, I think the majority of analysts are saying very negative things about the United States. You're a Canadian who's lived in San Francisco for a decade or more, so you're right there in the middle of the action. Why is your view so different from so many others? Why are you so positive?
Well, since 1980, manufacturing jobs in the United States have been in a relentless downtrend. Meanwhile, healthcare jobs, retail trade jobs, financial sector jobs have all been on the rise. And these jobs are parasitic jobs, and yet the United States economy is still the biggest economy in the world at about $15 trillion, with China in second and Japan in third place. Right. And this cannot carry on forever. United States needs to bring manufacturing jobs back, but the whole mantra of the last 30 years has been globalization, outsource, move offshore, move it to where the cheapest production costs are available.
Sure, you bet.
Dump the costs of environmental controls and health and safety for workers somewhere else. So this 30-year cycle has really hurt the United States. And now we're seeing manufacturing jobs actually start to uptick. Medical jobs are still going up, and that's the big sort of problem in the United States because we have this enormous entitlement boom bubble in the terms of the boomer generation,
right.
The first one of whom turns retired this year. And that's really not a productive economic base. If young people are going to be taking care of this older generation, this retired generation, they need to have productive jobs that produce stuff that's used locally and capable of being shipped abroad. And we're starting to see the turnaround happen. It's very subtle, and I think as it starts to gain traction and become more visible, that's going to change this death spiral mentality we're seeing in the United States completely around, and we will hear an end of all this apocalyptic talk, and the Republicans will become very quiet, at least the Tea Party portion, and start focusing on, hey, we have a future that's actually expanding rather than shrinking as we've been seeing it for the last 10 years.
Well, John, there is absolutely no shortage of apocalyptic forecasting going on about the United States and death spiral, this, that, and the other thing. It's just kind of refreshing to hear someone offer a different opinion. And yet we still hear of unemployment numbers in the United States in and around the 9% range. But experts will tell you that, in fact, the unemployment rate, the real unemployment rate, is probably close to twice that much based on reporting practices and so on. First of all, do you believe the unemployment numbers are as dire as some would have us believe?
When they were at 9 to 10%, that was pretty dire. And yes, there's always that significant number of people who have just given up and are not counted in those numbers.
That's right, yeah.
What's really important is the trend. And jobs are starting to be created. And in fact, last month we had or at least for the February numbers, we had the biggest increase in a long time, percentage drop in unemployment numbers. And significantly, 17,000 of the gain in those numbers were from manufacturing, which is a reverse. Usually every month there is a decline in manufacturing numbers. And anecdotally, I'm hearing companies that had moved their factories in that offshore to China and so on. And after they've been through this thing of 5 to 8 years of doing this, they've realized the whole thing is a wash. and we're not able to compete against domestic Chinese companies in terms of getting government contracts. For some reason, it always goes to the Chinese companies. Our intellectual property ends up being suddenly known and used by our competitors. And the wisdom of being over there is in question. And now we have the supply chain question. And I've been covering the rare earth sector for the last 2 years, and supply chain has been a big phrase within that whole narrative. But now, with the Japanese disaster and factories in the United States, in Europe, in Taiwan, realizing, well, we have this one component that's critical to the final assembly of our product. It's manufactured somewhere in Japan where it is now shut down. So our entire supply chain is grinding to a halt.
Right.
Boeing itself is shifting, is getting away from this model of having everything dispersed around the world, even the design components, to rebuilding the entire, re-centralizing their entire factory, their assembly facilities and design facilities in the Seattle area, and forcing the subcontractors, insofar as they're going to have a contract from Boeing, to have a facility within their industrial park so that they can talk to each other. And the other thing that we hear a lot about, innovation is really the key to American greatness and so on.
Sure, absolutely.
But Andy Grove made a very, I think, wrote a very insightful essay last year, and he's the former Intel chief, and he said, innovation really only works when the skunk works that does this sort of innovative work is in physical proximity to the actual manufacturing. And what's happened is that with our manufacturing going to China, where everything is just rote assembly and following the rules, whereas the geniuses are over here in North America in their little ivory towers, that being able to go into the machine shop and get somebody to machine something into form and try it out, that isn't happening anywhere. So they've realized the innovative edge has become neutered by the fact that production is elsewhere and the thinking is over here. So that's become another argument to move manufacturing back into the United States in close proximity to all the thinkers who are the leading edge of technology innovation.
Interesting stuff. Our guest this week on the Money and Wealth Show is the head of Kaiser Research, John Kaiser, joining us from San Francisco. Lots more ahead. Stay with us.
Always consult your investment professional before making any investment decision.
American Manganese Inc. has a world-class deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. We're in conversation with the head of Kaiser Research. John Kaiser is back with us on the program this week. John, you live in the United States. We have many opinions been offered on this program about the economic policy of the United States these days, this whole business of printing money, or quantitative easing, as they like to call it. A lot of people are saying it's contributing to inflation. It's going to be the reason that the United States is going to end up in serious economic trouble. What's your take as a person who lives there with this whole quantitative easing business as you see it down the road?
Well, the quantitative easing has had two phases. And the first phase was literally the government going out there and buying mortgage-backed securities that had no liquidity, and we suspect that they were paying more than they were actually worth, and in the process they were repairing the balance sheets of the financial system, and in essence they were indebting American taxpayers to save the world from a complete all-out financial collapse, which would have been absolutely horrific. Now, it's not like they're just giving it away. They do retain title to these assets, so it's very critical for the United States to build a floor under real estate prices. They have come back 31% from their peak in 2006. They looked like they bounced off the bottom, but then they wobbled again, and they're right now back at that edge when everybody's wondering, well, are we headed for another 20% move down?
A double dip.
Yes,
Yeah.
and then this would be catastrophic because there are still a lot of adjustable rate mortgages in the system,
Sure, yeah.
which if those ones have to adjust to a higher rate, then we are in serious trouble. So this is the reason they're not increasing the rates. They have to keep it low. What they've been doing by printing money, and in the second phase of the QE2, they were actually buying the T-bills, the short-term T-bills.
Buying their own debt.
Yes, and
Right.
forcing money into the coffers of the banks and all these other entities that own it. Now, the pension plans in the United States have a serious problem because they ended up investing in a lot of this mortgage-backed paper, and they took a significant bath. If you look at the net asset figures for the United States, the pension plans rode up in terms of total holdings, net worth, along with net homeowner equity. Homeowner equity has come down significantly, but the pension plan reserves have gone up substantially, tracking the stock market. And what's happening is the money's being pushed into these entities, taking these worthless securities off the hands of these fund managers who are now looking for yield. And this has helped. And of course, where do they find yield? Well, not in America, where things have looked kind of gloomy and are likely to get worse.
Right.
They've looked in emerging markets such as China and India and Brazil, where there has been a major fiscal stimulus, printing of money to actually put into the ground to build infrastructure and all that has helped create real jobs and a legacy that's going to be of value to the future generations that will have to pay off the debt. So that has kind of backfired on the United States, except insofar that the New York Stock Exchange has recovered quite nicely and everybody's accounts look a little better than they did at the end of 2008.
But is this a real recovery, John? That's what the big question is. Is this all phony and fake based on valueless paper currency that's been printed in the hundreds of billions of dollars? Or is there more to it than meets the cynical eye?
Well, one of the things we're starting to observe is that homes, these foreclosed homes that are on the market empty and some of them priced at less than the replacement cost of the building on, in essence, free land, they are now being bought up, not by Joe Sixpack, because he's still worried about his job and is only getting a temporary job insofar as he or she is getting a job, but the hedge funds and the pension plans. So the next wave of what to do with all this money is to start buying this beat-up real estate. And key to this is evidence that the real economy is back on the mend. And I was talking earlier about the manufacturing job increase. A manufacturing job is what's going to drag that 20-something-year-old out of his parents' basement into a job and then into an apartment where he's paying rent. And we are seeing the owner equivalent rent index start to go up. And this is what we need. We don't need house prices to go up. They are not likely to go up in a very long time. But what investors need, hedge funds, pension funds, and so on, they need rate of return. They need a yield. And so with stable real estate prices and rents going up, that's your return. That's going to be a lot better than the 0.5% to 2% that you're getting sitting in T-bills. And this is the big sort of switch that we hope is now underway. Build a base under real estate, get manufacturing jobs to increase, and then all that other superstructure, all the retail jobs and financial sector jobs and all that, all those will breathe a little easier and stop fearing that they are also on the edge of falling off a cliff.
Well, one of the things that we've learned that since the crash of a couple of years ago, a lot of companies have been forced by economic realities to fine-tune their operations. They're all running pretty lean. And as a result, they have cash. Manufacturers in the United States are actually sitting on a fair bit of liquid cash. So that money just needs to get back into circulation and hopefully, John, in the form of jobs. Certainly that's what the president wants to see happen, and yet there are people who say it's because of his policies that we're reluctant to spend back into the economy. There appears to be a problem there.
Well, there was this shell-shocked mentality after the 2008 crash where nobody had any real positive vision about where the future was going to go.
Right.
And of course the debts had piled up and there's concern about how to service it. And there's been this sort of very insidious mantra that's emerged about how taxes are evil, and the Tea Party has been a major proponent of this. And there's been people like Robert Reich, who professor at Berkeley, who used to be part of the Clinton administration.
Yes, of course, yeah.
He's crunched the numbers, and he's observed that for Social Security, right now it's capped at $106,000. Anything you make above that in a salary, you don't get the FICA tax that goes into the Social Security pool. He has estimated that all you need to do is increase this to $150,000, and this huge Social Security hole that we see absolutely vanishes. So the hostility towards taxes, it doesn't make a lot of sense for the people who are making more money than your average individual. They can afford to pay a little bit more tax, and I think what's going to happen is they will end up paying a little bit more tax. Right now, when they set the Social Security system up in 1993, it was based on 1% of the population controlling 90% of the, or the rest, only 10% of the wealth. Well, right now, it's 84%. And so there's been this drift of concentration of wealth, and all that wealth is surplus wealth. So it's a fairly easy fix to take a little bit more Social Security tax and repair this so-called imaginary future entitlement problem. But other spending, Medicare is the really, really big one.
I'll have to get you to hold that thought too, John, because we need to take this break on the Money and Wealth Show.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week is the head of Kaiser Research. A real pleasure to have John Kaiser back with us. John, talk to us about the stockpile stories that are all over the newspapers, and not just Canadian newspapers either. We're hearing of our best customer, our best and biggest customer, China, having enormous stockpiles of metals, particularly copper. And a lot of Canadian investors are going, wait a second, have they got so much stockpiled that eventually they're going to hit a threshold where they're going to start calling the mines back in Canada and say, we're good for a while, we don't need anything for a year or two? Is that what's going on with all of these stockpiles?
Well, I believe that after the meltdown in 2008 and copper crashed all the way to $1.30, China knew it was going to be spending $600 billion on infrastructure expansion and that it would survive this downturn. And it's knew that Europe and the United States were on the ropes. They weren't going to be consuming much copper. So they used this window to literally soak it up. And they have stopped buying because copper is now over $4 a pound. Mm-hmm. And they've soaked up all the available copper. They were like literally bottom fishers. And the question is, are they like bottom fishers who are going to want to flip it out now and make a profit? Or are these stockpiles held by these state-owned entities
for their own use?
Yes, for long-term security.
Okay.
They are not bought like the way a hedge fund might buy metals as a speculation on future price. And that's the concern. Is it going to come back into the market? I don't think so. China thinks in much longer timelines than the rest of us do. And I think they are very concerned about supply channels. They see perhaps future tussles with the United States, which pretty much still through its military controls all the supply channels. So they want to have as much raw material parked on their shores as they possibly can. I don't think prices are going to rise significantly higher from current levels. I can see them retreat, but then I think the area to make money is in the mine development, where you plug in prices like, say, between $3 and $4 copper into into your cash flow models and hope that this will be the number that prevails and forget about the 450 that you're seeing right now in the spot market.
I guess, though, from a Canadian investor in whatever mining activity I might happen to have my few dollars, I would only be concerned about demand for whatever company I've invested in, whatever they're supplying those customers overseas. All I care about is those customers are going to continue to want to buy our goods. Is that so? The supply, I think, is the concern from our end, the delivery end.
Well, the existing mines are still going to be producing copper, and they're going to be at the mercy of the prices. And they have started forward selling again. They do see the price maxed out, and so they're taking advantage of this right now. And we'll see if perhaps they were wrong again, the way they were in the last decade, where they didn't stop forward selling until April 2006, when they suddenly realized that China was real and not just a flash in the pan.
Our guest on the Money and Wealth Show this week is the head of Kaiser Research, John Kaiser, and he'll have the final word after this.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Looking to advertise to targeted audiences? Online at talkdigitalnetwork.com or howstreet.com. On television, The Money and Wealth Show. And on radio, This Week in Money. To learn more about getting your message in front of our audiences, email us info@howstreet.com or call us 604-699-8600.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
And now, with the final word on today's program, here's John Kaiser.
What has everybody worried right now is it looks like we are almost where we were in June 2008, with commodity prices jacking up substantially. And then in July, we got KO'd, and it was all over for the resource junior sector. I think this time we have a different situation. We do not have the over-leveraged financial system as we had then. This time we have natural demand pushing up these raw material prices. And I think what's going to resolve itself in the next 3 months is whether or not these high prices are due to monetary policy or whether it is due to a lagged or inadequate raw material supply response during the last 10 years to the emergence of China and India as major drivers of the global economy. And if we throw in a turnaround in the American economy and Europe also get itself going properly, then we have a major boom in raw materials for which the only solution is put new deposits into production. And the prices don't need to go up. All you need to do is make these mines happen and produce the raw materials that will generate the cash flow 3 to 6 years from now. That's where I think the game is in the next while, and it's not in the metals, it's in the companies that have deposits that deserve to be put into production.
John, thanks for coming by. It's great to see you again. Where do people find you online?
KaiserResearch.com, no hyphen.
John Kaiser is the head of Kaiser Research, and it's great to have him back on the show. Our thanks also to Fritz and the crew here at Churchill's at the Holiday Inn in North Vancouver, once again for the hospitality. And for all of us on the Money and Wealth Show, I'm Sterling Fox. See you next time.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.